Hello, everyone. Welcome to today's broadcast, today's live session over the non-farm payrolls. We usually do these at 10 o'clock during the week, but as it's payrolls day, we slipped it back to 1:15 as usual. So what we'll do, we're going to take a quick look at what's expected today, why it's important. We'll have a look at the markets ahead of the payrolls because clearly it's been quite a week in terms of volatility. And then we'll sit there, watch how the market reacts to these payrolls coming out, and wrap things up from there. As usual, if you've got any questions, just if you're watching live on YouTube, just put the questions in the chat on the right-hand side, and I'll probably come back to them after 1:30 when the payrolls come out. But it has been a heck of a week this week, isn't it? We'll look at the markets in a second. Let's run through the payroll stuff first. But we've seen a big sell-off in oil, relatively big sell-off in stock markets. Really, I mean, it all started on Wednesday night when we had that US interest rate decision. No changes as expected, no surprises there. But what seems to have maybe upset markets is the Fed, the US central bank, standing firm and saying no rate cuts. So we sort of quite a bit of pressure on stock markets. You know, oil has also slid quite heavily. Clearly, the oil sector makes up a big part of stock markets as well. That's dragged markets down. So we've seen plenty of volatility. So we will look in a bit more detail at the S&P 500, US crude oil, and the dollar index. And we'll have a quick look at other markets as well. But let's get into this payroll stuff first of all, because they're due out at 1:30. Just want to make sure I've got all that stuff covered before that happens. So what are the payrolls? If you're new to it, it's a major monthly economic release, usually announced on the first Friday of the month, which of course is where we are now, but sometimes gets slipped back to the second Friday of the month. It's US unemployment data. It's often used as a barometer for the health of the US economy. So it's a major monthly announcement. Today's expectations are for around 185,000 jobs to have been added to the US economy in April. So that's the number to keep in mind, 185. Okay, that's what we need to be thinking about for 1:30. Here's a quick look at the numbers over the last 12 months or so. So if we came in at 185, we wouldn't be too far off the numbers last time around. Then, of course, we had that shock number that was announced in February, how many jobs were added in Jan. So let's see what today's number looks like. But so this sort of 185 to 200 has been the band. So we'll see how the market reacts. Let's jump onto the platform and take a look at some of the stuff that's been going on this week. Let me start with stock markets. I mean, stock markets have grabbed lots of the headlines. Let's just put this up. So let's go on. We'll stick to the S&P 500. So the broader US index. So that's the sort of moves we've seen. So we did, or maybe the Dow actually, maybe the Dow is the better example because we can talk about maybe point movements a bit clearer. So here we go. So the Dow this week, when the Fed announcement came out, it was 7 o'clock on Wednesday evening. So about here, the market was at, let me just scroll that over, was at 26,650. And you can see sold off heavily into the close and then carried on selling off. And yesterday as well, I thought we were going to see a bounce back yesterday. Didn't happen though, not until later in the session. So by yesterday, the market had got the Dow, it got down almost as low as 26,150. So we've seen, a 500-point move since Wednesday night. So over two sessions, really, two actual in-hours sessions. And given the lack of volatility we've had this year in stock markets, yes, they have gone up massively, but we haven't seen that much day-to-day volatility. That's a pretty big move over the last couple of days. So we've seen plenty of sort of speculation. Is the top in after the great rise? All this sort of stuff. For me, if we go back, let's go back and look at the S&P because it is the market I like. If we flip this over to a daily, just to put all of this into some perspective, where we are in the great scheme of things, clearly this is the move this year. And if let's take the RSI off for now. Okay, it's a big. There's Wednesday's move. It's a big move compared to what we've been used to recently. But in the great scheme of things, it's the same way. If we went back here to look in March, it's just another little move against the trend. So for me, my assumption is for now, I mean, I was looking to try and buy yesterday, but it never held. Really looking to see now markets push back up to these recent highs. So I think this could make for an interesting afternoon. I think without the payrolls anyway, given the volatility we've had over these last 2 days, the fact it's the end of the week today, maybe, Fridays can often be interesting. I think the payrolls are going to add an extra bit into that mix. So let's see what happens today. But going into today's session, if you look at the S&P, bring up the hourly. So that was like the swan dive on Wednesday after this interest rate decision, moved lower overnight. Then we saw it stabilize. Yesterday, it did look like it was trying to hold above those overnight lows, but took those out at 4 o'clock. And actually, since then, we have seen the market bounce back. So let's see what today's action looks like. But going into today, if we saw any weakness, I'd be watching these lows from yesterday on the S&P around about 2,900. I think if we can break above yesterday's highs, 29.32, that sets up a better recovery. So I think let's see what happens, but potentially an interesting day off the back of these payroll numbers. And if we're looking at the Dow, I just want to have a look at oil as well before I sort of shut up and wait to see what these numbers look like. So here's the Dow move. So yesterday traded as low as 26,150. The high for yesterday is around about 26,450. So that's our band for the Dow, 26,150 to 26,450. Let's see if it can break one of those levels today and set up the next move higher. So for me, I'd be tempted to be a buyer on any weakness. And if it breaks through yesterday's high, look to buy any breakthrough from there. Okay, so I think we've got some clear reference points to watch yesterday based off the volatility based off the volatility we saw yesterday. Right, let's have a look at oil, because we've seen that price under a lot of pressure. And again, it's really because we have had low volatility this year. If we look at the daily chart of oil, all right, it's gone up all year, but we've not had much in the way of sort of massive sell-offs or enormous day-to-day volatility. So when, maybe a year ago, the sort of moves we've seen over the last couple of days wouldn't have been that startling. Because it has been so relatively quiet this year, this is why I think we're having a bit more excitement, which is all good. But so where were we earlier this week? So we last did this, I think it was Wednesday of this week, and we were seeing the market hold ahead of sort of $61.80, $62. Maybe let's flip this over to an hourly chart and see what it looks like. So when we were looking at this earlier this week, actually that's the end of last week. So coming into this week, it did look like the market, the oil price, was holding above the lows from the end of last week ahead of 62. And then yesterday, again, the market under pressure, crashing through those lows, trading as low as 61. So it's the lowest it's been since the beginning of April. So it's a 1 month low in the oil price, so it is quite the turnaround off those highs. So those highs just above $66.50 a barrel. So we're about $4.5 below those. So the question is at the moment for oil, do we think this is the sign that the recovery is over? Well, arguably it's too early to tell. But what I would say, we haven't really seen a break like this on the way up. We've seen the market, the oil price, wobble off a little bit, only to push higher, sell off a bit, holds above the previous low, off we go again. So we get the odd little correction on the way up, but we don't really get almost like a double move down like this. So it certainly is arguably the most bearish it's looked in recent times, based on how it's been trading. Arguably going into today, it's still under a little bit of pressure. But I think some of the levels we were talking about earlier this week, $58 for me is the big one on oil. It was a real hurdle on the way up here, banging its head in Feb, breaks it in March, and then 58 sits on 58 through the rest of March, and off we go. So personally, I still think we'll see it have another go at that old high. The only question is, how far down does it go before it does that, So I suppose, the aggressive trade would be to be a buyer now, for example, at 62 with a stop loss under yesterday's low. For me, that's probably a bit too aggressive because the market just got clobbered so much yesterday. So maybe we need to get today out of the way and come into next week for oil and see how things are sitting. But so I think maybe for now the risk is this. I think this will have spooked a lot of people and surprised a lot of people over the last 24 hours because it has been a nice market to sort of swing trade this year because you haven't had to worry too much about the volatility day to day and a bit of patience. And if you were long, the market's moved in your favor. But I think the last couple of days have been very different to what we'd experienced for most of this year. So let's see. So $61 for the rest of today is the level to watch. Traditionally today is normally a busy, potentially volatile day. Maybe given the excitement we've had so far this week, it'll end up being a damp squib in the end. But finally, the dollar index, before we flip over and look at how the markets are reacting, the dollar index clearly with a US central bank coming out this week and saying they're not expecting to make any rate cuts this year. Interest rates staying where they are, maybe creeping up towards the end of the year into next year. That's good for the dollar. That is good for the US dollar as that currency. So over the last 3 days, there's the move. So it was looking a bit weak on Wednesday. We had that announcement on Wednesday. And you see the last couple of days, the dollar index has been positive. And this has been one we've been watching for a while because only earlier, or actually last month, the dollar index had a breakout. So we saw the dollar index break out to its best levels since May 2017. So we've got the dollar index not far off a 2-year high. Sells off. It's been a bit of a messy breakout so far. Sells off, but this is exactly what I would expect if we think this is going to be valid. It drifts back off. So it's going to be, I think, a really interesting market to watch next week, the dollar index, so my assumption would be we're going to push through the old 98.5 highs. So let's see. Let's just flip this over to a short-term chart. And you can see the turnaround. There's the announcement on Wednesday night. So the dollar index had been drifting since pushing out to that breakout level. Had been drifting from 98.40 up here, April the 25th, down to sort of 97.40 beginning of this month. Bang, there's the announcement from the Fed saying no rate cuts. I think President Trump had been asking for rate cuts to really put a rocket under the economy, and he was ignored by the Fed. And since then, we've seen the US dollar gaining. So I think this is an interesting market to watch this week. But I think, we're going into today with arguably, a bit of a confused picture. I'd be looking for oil to bounce back, S&P, Dow, all of that to bounce back. But maybe we're just going to have a bit more uncertainty today and a bit of a cleaner sheet coming into next week. Let's see how these markets react. We'll have a quick look at the pound because obviously in the UK we've had the local government elections yesterday, and we've had a drubbing for I think both of the Tory party, the Conservative Party, and the Labour Party. A bit of a protest vote going on. We had seen the pound bounce back a little bit again till the middle of the week, but of course, you factor in that US dollar resurgence and the dollar coming back, that is going to put pressure on the pound. And the same for the euro. If you look at the euro, I'm sure things are going well. Here we go. Things are going well until Wednesday. There's the Fed decision on Wednesday. Dollar strength. What does that mean for the euro? Euro weakness. Okay. And a quick look at gold, and then I'm going to flip over because there are 30 seconds left to go. Here we go. So again, we'll have a look at these in a bit more detail in a minute because gold's an interesting one. But there's the decision. Let's just bring this over to the Dow. Bring that one up. See how the market reacts. Then we'll have a quick look around. Okay, and we are about 13 seconds away. So I've just brought Twitter up here. It's normally a good thing to watch for this sort of breaking news because they do release the data on Twitter the same time it gets released. So the Dow is at 29,367. Let's do that. So 185 is the number to watch. I think it's not actually moved. Bang. Okay, there's the move. Okay, so the market's gapped up about 30, 40 points. Here we go, 263. Okay, So there's the number, if you can see that. Payroll employment increases by 263 in April, unemployment rate declines. So that has beaten expectations. We're about 80,000 over expectations. It's interesting, the move. Look at I think, again, trading payrolls, if you're going to try and take a position at sort of 29 minutes past 1, it's arguably not the right way to do it, because it can be something of a coin flip, because very often the first move is the wrong move. And it will be interesting to see how this plays out maybe over the next half an hour or so. So we had quite a positive reaction right before the number came out. The Dow was what, 26,365, gapped higher, gapped about 40 points higher, 35, 40 points higher. It's come back down, and now it's back up here again. So you can often see quite a bit of sort of almost headless chicken trading going on when this number comes out. And I think maybe the better way is to give the market a bit of time to settle down and see what it thinks of it. Because look at that now. So we've gone actually negative now. You can see that from where we were before the number came out. So again, maybe we are going to have an interesting afternoon, but let's just sort of almost let things settle down. So we're trading pretty flat now compared to where we were before it came out, but plenty of volatility. Let's have a quick flip round some of these other markets, then we'll look at some other stuff in depth. So let's take a look at the dollar index, actually, as we were looking at that. Let's take a look at that dollar index and see how that has reacted. If I can find it. Where is it? Here. Okay, so dollar index. So there we go. We saw the dollar index spike a bit higher. So the dollar index before the announcement was about 98.18. What did it touch? It moved up a bit, 98.23, something like that. And again, pretty much trading. Oh, what am I talking about? The announcement was there, wasn't it? So 98.08 spiked up to 98.23, and it's still slightly above. Because arguably, you know, as a stronger economy, if we're seeing more jobs added than expected, the economy arguably looks stronger than expected. So that would make the central bank more inclined to raise rates. Okay, so which would be good for the US dollar. But again, it's giving up the gains. We just have almost headless chicken trading again. And then finally, crude oil. How did crude react? By the looks of it, not much at all. Here we go. So where were we before the announcement? It was trading at about 62.12. We're currently 62.5. Okay, so not much of a reaction from the oil price. So going into this afternoon, you know, for stock markets, I'll be watching the high and low for yesterday. So it's been a volatile couple of days. I don't think that volatility changes that bigger trend. So I'll be looking for these markets to snap back. Okay, so let's see what happens, but watch the highs and lows from yesterday. Before we wrap things up, let's just take a look at gold, because gold has been getting beaten up over the last few days. Here's our daily chart. I remember we looked at this when we were looking at it about the third week of April. You know, I keep harking back to this recovery in gold that's been going on since there we go, August last year. And we came back to that trend line, April the 23rd. We saw something of a bounce back of that. We've given those gains up again. It is looking weak, gold. You know, yesterday again, it pushed to new lows for the year. So at the moment, it is feeling like it can't hang on to any recoveries. You know, and I think the risk is if we see a push through 1260, let's say, you know, below this trend line, below these old lows, it does start to look like we're going to get a much deeper sell-off in the price of gold. So we're ending the week on gold pretty much where we were about the third week of April, in a situation where it really needs to bounce and get a move on if that recovery is going to hold. So the aggressive trade, if you're following this trend, we've had it pull back to the trend line. Here's our aggressive trade. You know, we want to be a buyer with stops under 1260 is arguably the aggressive trade on gold. But if it goes below 1260, I think the risk is we'll see a deeper sell-off. You know, the RSIs are backing up the buy argument here. Oversold the 23rd of April down here. Pushes a bit lower yesterday, but our RSI, you can see, does not quite go into oversold again. So we've got what's known as bullish divergence on the RSI. So a suggestion that maybe the weakness is running out of steam. is maybe the suggestion there. We're going to have a quick look at the DAX actually before we wrap it up, because it looks like the DAX has moved to fresh all-time highs for the year. So gold, it's really interesting down here, but it really needs to get a move on from these sort of levels. So we'll just have a quick look at the DAX, and then we will I'll answer that. There's someone's asked about New Zealand dollar, Canadian dollar. We'll take a look at that, and then we're done. So let's take a look at the DAX. Where are we? DAX, here we go. So the DAX was shut on Wednesday, of course, because it's 1st of May, so continental European holiday. There's the move in the DAX. DAX again, great trend, obviously. It's been chugging along this bit of the trend since March last year. This year, sorry. Started again about 3 weeks ago, middle of April. Has struggled a bit over the last week or so with 12,400. But there's the move in the last hour and off the payrolls. So we're now on the DAX out to fresh highs for the year. There it is. So we're running into these old resistance areas, about 12,480, 12,490. But the DAX has had, look at that, it's a great week. There's a great, look at that argument for trading with the trend. What's that? In the last 15 days or so, we've had one red candle. So one day where the market closed lower than it opened. We've had plenty of sort of not particular volatile days in here when the market went sideways, but perfect argument for trading with the trend there on that one. And of course, which way are people positioned? I do pick up on this now and again. So most people trading the DAX with us, you can see 61% sellers. People really struggle to trade with the trends, but that DAX trend pretty clear. Bitcoin, that was the last one I was going to do. Forgot to buy it. I was going to buy it this week. I bought it in this. We did a trade on this, didn't we? So did a little trade on Bitcoin. So it's up 20 quid on here. But I was going to actually buy it really as well. I have to wait for the next pullback, see if we get one. But here's the Bitcoin move. I was saying all along, this move was interesting. This surge we had in early April. We've seen plenty of false dawns for the Bitcoin price, only to see it sell off. I thought this move was interesting because it broke so many previous levels. Plus, we haven't had the massive sell-off. It's pushed a bit higher. We've had it dribble a bit lower, nothing drastic, lots of support at 47.50. And again, today, off we go again. So it continues to build the argument that we are experiencing a real recovery for Bitcoin, which is the first time we've seen this in more than a year. So I think it's interesting down here. Continues to be interesting. Bitcoin continues to be, for me, a buy the dips. The closest I would want my stop at the moment would still be the other side of 4,800. So let's see what next week brings. If we get maybe a bit of a drop in the crazy cryptocurrency, and maybe I can finally put my finger out and buy it. So that's that. Okay, let's get into questions. New Zealand dollar, Canadian dollar, NZD, CAD. Okay, let's have a look. Let's bring that up. Where are we? It's interesting, isn't it? On the dailies, it's interesting, isn't it? Because we had this some duff data in there. We had this downtrend that had been in place since March 2018. Clearly ended last year, or November, October last year. Quite a sharp move higher, really sharp move higher. Not much of a pullback to get back on, and a little bit sideways for much of this year. New Zealand dollar, Canadian dollar, but again, for the aggressive trader, or not even that aggressive, I suppose. We're back down to levels that have really been the floor for the New Zealand dollar this year. So around about these lows from whenever it was, February the 13th. So the lows are what? 88.98, so 8,900 pretty much. Ran up 350 points from there, come back down to it. What's interesting, it did try and break it in April the 24th. We haven't had the follow through. To me, famous last words, we'll come back to this next week. It looks like a really interesting, low risk, potential high reward buying opportunity. So I think for me, we've got the support in for a start at 89. Let's do a trade on this as well, so I can keep track. So we've got the support in at 89. It's had a couple of goes to break through, but we're not really getting any follow through. So what's the low been? 88.75. So let's say let's have a look at this for a trade. Let me just change the zoom. So 88.75. Say we're going to buy it. I'll put the stop in first. I'll do the usual massive 25 quid risk on the trade. Okay, so we need to be 10 times bigger than that. 10, 1, 2, 3. There you go. So that's about. So if I buy 10,000 with a stop at 88, not 88.75, 88.50 is actually where I want to be. 88.50. That's what I'm going to buy. I'm going to trim that back a bit to 7,500. What's that look like? Oh, a bit less. 5,000. It's late in the week, so I'm struggling to use a keyboard. There must be an easier way of me doing the maths on this. 6,000 is going to be 25 quid, isn't it? There we go. So close at a loss. Close when price hits 88.50. Buying 6,000 with a stop there. Okay, gives me 24 quid risk. So let's place the order. I am definitely buying, aren't I? Yeah, there we go. Done. Right. So I think it's interesting. So let's see how that's doing next week. I think it's interesting down here that this level has held pretty much since November last year, and it's had a few little goes at breaking through, and it hasn't managed to break through. So I think it's an interesting one down here. So looking to see if it can stage some sort of recovery next week. FTSE 100, somebody said. So FTSE 100, here we go. So look at that. So it looks like, so we're clearly, again, you know, clobbered in line with other markets on Wednesday of this week. But doesn't really change that trend, the trend for the year. You know, if we were going to pick up on that, on a trend for the year, I don't know why sometimes it doesn't want to do that. I think I need to refresh and clear my cache a bit. There we go. So if we were going to pick up on the trend on the first, and it went oversold as well. Let's have a look at that in a minute. So our trend, look at that, was textbook. So it gets clobbered on Wednesday, trades back to 7,300, oversold. First time we've been oversold this year, actually, on the FTSE, on the 10-day RSI. We've got to go back to just before Christmas last year. Holds above it yesterday, and bang, off we go today. So for now, it is performing like a very obedient trend will perform. So for me, it's going to be interesting to have a look at this on Monday. No, actually, it's Bank Holiday Monday, isn't it? So we won't look doing this again until Wednesday. But when the markets start again next week, it'll be interesting to watch this 7,300 level on the FTSE, because it has been good support. But for now, the expectation will be for that trend to continue and for a push back up to 7,500 plus, that sort of area. Looks like crude oil is on the highs of the day so far. Let's take a quick look at that, and then if there's no more questions, we'll start to wrap things up. So crude is there we go. So we had a bit of a move in crude. Yesterday's highs are still $1.50 higher than where we are now. So not too much reason to get excited, but trying to stage some sort of recovery. And then have a quick look at the US markets, then we will wrap things up. So look at the S&P. So yeah, so strong at the moment after the payrolls coming out. There we go. So volatile over the number, but building a bit of momentum. But it can all change. At 2:30 when markets open for real, it can all change. So we'll see. We'll see what this afternoon looks like. But for me, the obvious levels to watch, yesterday's high and low. So for the S&P, it's up around about, well, pretty much where we are now, to be honest. So yesterday's high was in or about 29.32. We're currently trading at 29.28. So if you thought we were going to see a cautious end to the week, it'll be interesting to see if these markets run out of steam ahead of yesterday's high. I mean, personally, I'd probably wait till 2:30 when it actually opens for real to see how these markets perform. But maybe we'll have a little bit of volatility again this afternoon after these payrolls. But overall, that's a good number from the payrolls, beating expectations. Economy stronger than expected last month at least. Let's see. So like I say, we will do it all again. We'd normally do it on Monday, but it's bank holiday in the UK on Monday. So we'll do it all again on Wednesday next week. To never miss out on the content, if you can subscribe to the channel, you get a push notification off YouTube when we go live. And that's it. So we'll be back next Wednesday. Good luck with your trading. If you're in the UK, enjoy the long weekend, and see you all then.